Good morning, everyone. We'll get started. Just to look at our schedule for the next couple of weeks, we're on our last hurrah here. And today, the 9th, we're going to be covering chapters 9 and 10. And that case, or that case problem, is due next week, the 16th. On the 16th, I will be talking about the PowerPoint presentation that we are scheduled to do on the 7th. And after that is actually the same day, the 7th, is when the Net Solutions project is due. What we have for the final meeting is May 14th, and that's just non-class, basically. And we'll be completing the employability skills document for you. What I'll do is it's 25 points. It discusses the employability skills that I've observed in class, and also your cases that you're doing. And I'll just do an objective, hopefully, evaluation of those soft skills. So the 14th is not a class for you guys. So basically by the 7th, that is your last class period. So just so we know where we're going in the next couple weeks. On the 23rd and the 30th of April then is working on your Net Solutions project. So you can do that wherever. You don't have to come to class either on those 2 days. Some of you have been using the computers here and they've been working pretty well. So if you want to continue that process, that's perfectly fine. I will be here both days, the 23rd and the 30th. Any questions on what's required to finish out here? All right, what I've handed out for our start then is the discussion on Chapter 9, and also I gave to you a paper copy of the ST12, which is Wisconsin's sales tax report. Part of the case requirement for this chapter is that you fill this out for the case, and so we'll cover how we complete this. I would like this then either scanned. If you want to write this out on paper, I can show you it's a copy machine. You can scan it that way. Or there are fillable forms out on the Department of Revenue, Wisconsin Department of Revenue website. They have a fillable PDF file that you can fill in and print out a PDF report. So that's also available. All right. Since we're covering quite a bit of the chapter or the SAGE product already, I just want to kind of re-emphasize some things regarding the chapter. First off, it talks about different types of transactions, and that's a quote, a order, invoice, and then credit memo. So those are the 4 types of transactions that you'll see within this customer section of SAGE. And along with that, when we do have a sale, right, we affect a lot of accounts, and 5 in this case. And we have to be aware when we start ever a new program that we need to know what accounts are being affected. What's being debited, what's being credited. And you'll notice here that if you see a cost of goods sold account and inventory, we need to know that that's going to be a sale of an inventory stock item. Remember, our classes for inventory, some are tracking counts or quantities of inventory. So when we see that cost of goods sold and inventory account being influenced, we're selling the stock item. So that's talked about in the beginning of the chapter. And then it also says, hey, we have to worry about sales tax. And what do we need to set up a sales tax code? Well, we need to know who do we pay it to, right? Who is the new vendor that we're going to create? And the example in the book, in the chapter, is California's, whose Wisconsin Department of Revenue, right, is the same thing. They're called the Board of Equalization. So very California-ish term. Board of Equalization is the same as Wisconsin's Department of Revenue. That's who we pay ours to, is the Wisconsin Department of Revenue. In Madison, of course. And our sales tax code is a percentage. Now, California's, the example in the chapter, is 7%. For us in Wisconsin, we're either at a 5% or 5.5. And there are some other locations, like in the southeast corner, with maybe a different rate. But for us, in majority, it's 5.5. There's very few counties left that don't have the 0.5%. Just off the top of my head, I think Outagamie, Sheboygan, I think Fond du Lac just switched. Manitowoc is another one without the 0.5%. But for Brown County, Door County, Marinette County, they're all 5.5. They have the extra 0.5%. So the author then on page 362, if we just kind of jump to that, starts to record those transactions, those sales transactions. And we have two choices, or two tabs. The Apply to Sale tab, or the Apply to Sales Order tab. So by bringing up a new invoice in Sage, I'm right here in this section here, and you can see the different types of transactions, a quote or an order. These two, no effect, right, on the GL. So we don't have any revenue, we don't have any accounts receivable being affected with those first two choices. But we do see a change in the general ledger is when we enter that invoice. Now, here again, we have a choice. I can enter my cash sale here on the sales invoice and have money received with that invoice, or I can enter the cash sale under received money. So those are kind of some of the transactions that we'll encounter. Obviously, don't forget, if we have a return or a reduction of an invoice, that's where we use our credits and returns icon for that purpose. There is also in the chapter a small discussion on charging finance charges. What is a finance charge? Oh, and they pay late? Yeah, it's when they don't pay on time, right? We can give them an extra charge, or basically we're charging them interest for being late.
So kind of like a late fee?
It's like a late fee, correct. So finance charges are also talked about in this section of the software program. So obviously, remember also, when we receive money, there's that deposit ticket ID, which we've been using, the date, right? If we use that deposit ticket ID, then I don't have to make a separate bank deposit, right? that's, again, a tool that, what are we trying to emulate? We're trying to emulate when I go to the bank, right, with all my checks from all my customers, the bank's going to show one lump sum. Well, I want that lump sum to be in my checkbook also for bank recs, right? That's the key there. So please continue when you make a cash sale or a deposit on account, right, from a customer, that we use the same transaction deposit date. And then we don't have to do a separate bank deposit function here. That's the goal with that. Saves you a step.
So, but in the QuickBook, we still have to separate, right? They don't have like it.
Well, we'll still use our date, transaction date as the ID. We'll just continue to do that.
I'm talking about in the QuickBook when the in
Oh,
the
QuickBooks.
Yeah, they don't have like it. We have to do separate. Right?
Yes,
Okay.
QuickBooks you do, correct. Yeah. Finally, some of the other things that it talks about in the chapter are customer statements. What is that for? Not a lot of people do customer statements anymore.
The detail for each customer when they place
Yeah.
order or
It's a detailed report for a customer summarizing usually typically a month's worth of activity. So at the end of the month, you run your customer statements. It's a report. And in some instances, you send that out to your customers to say, hey, as a reminder, you owe this, right? This is what you owe. Don't forget to pay us. So in some instances, I've had customers pay off the statement. So that's good. I mean, they're pay off that amount, and then I get my money maybe sooner. Also addressed in the chapter is sales tax, right?
Yeah.
Always paramount when we're considering selling to our customers, we have to worry about sales tax. Now, Wisconsin Department of Revenue requires us to collect that money. Is that ever a revenue source for us?
no.
Do we charge? No. So I should never see a sales tax income on our income statement, right? So what is the sales tax to us?
It's a liability.
It's a liability, correct. So when you set up that account, it's a current liability, right? It's a current liability. So we must make sure that that's where it should be located for our company. Okay, I think we're not going to deal anything with jobs or job time tickets. Those are for T&M type work clients. So if you did charge by labor or you did charge by materials, that's where those two would be set up then. That kind of covers the whole chapter 9 there in a nutshell based off of this one screen. So I'm going to take a quick snapshot of this so that it's saved in our notes for today. I'm going to clear this out. So going back to our notes then, sales tax rate is what? Based on the location of your customer. Where are they located? So if I'm selling to a Brown County resident, I would charge them 5.5%. If I'm selling to a customer located in Sheboygan County or Manitowoc County, I'm charging them just the 5%. So that's the purpose of that. We need to know or identify those locations. And on the invoice, that number 1 means it's taxable. 2 to 10, exempt.
Quick question, what if you sell out of state? You still have to collect?
It depends on if you have a site and in that state, an actual physical location in that
If you
state.
don't, then you have to.
You're not supposed to, and you're hoping that they do what on their end? They claim a use tax. So they will pay when they purchase the item or when they fill out their tax return, their ST-12,
Okay.
that they fill in a purchase that didn't have sales tax on it.
Okay.
But now, like if you're on Amazon or some of those big selling sites, they do charge even if they don't have a site in that state.
Okay.
That's pretty much US-wide now.
Okay.
A lot of states were losing money, so they made sure they got their cut.
Okay.
So yeah, Amazon and those, they will charge you sales tax now. Does everybody know where this one is then, on the invoice? There's a little box. Maybe I should show that just quickly, it doesn't take long. So if I go back to my enter invoice, it's right here. So you want to make sure that's a 1 to show that it's taxable. And then also what? We have to identify the Wisconsin sales tax county that they're in. So Wisconsin needs on their sales tax report an identification of what county does it go to. Now, also be aware with your entry that you can look at the journal entry, the debits and the credits for any type of transaction, and that's always useful. Also be aware, when you're creating a new invoice, we have to make sure we're not hiding. Don't hide, right? Don't hide the accounts receivable accounts. Does anybody remember where I can make sure that's not hidden?
Yeah, you go to the
Options, right? Very good.
And
Options, global,
yeah,
and on this accounting, make sure that you have no check mark in the high GL accounts. If that's not there, then you should be able to change that revenue account if you need to. Returns are talked about on page 366, 368 of our book. They actually have you go into the right section. It's called credit memos, or credits and returns. And I want to talk about this account. It's called sales, return, and allowances. What type of an account is this?
it's contra income.
Contra income. Contra sale. So if it's a contra, what does contra mean?
They're gonna minus your revenue, reduce,
Yeah, it's going to reduce. So
opposite.
opposite means contra. So instead of having a normal credit balance, right, this sales return will normally have a debit balance. Sales return and allowances. Also, the ID number they use is 404. So we would like on an income statement, as far as physical flow, I want my sale accounts, which is 400, I'm just assuming here, to 403. Remember, Sage prints them in number order on the income statement. And then I want the 404, which is the sales returns and allowances, to sit below my sales counts. And then what I should get on my income statement is my net sales. Net sales means net of returns and allowances, right? So when I ask for net sales, I'm looking for that number after the returns and allowances. When I talk about gross sales, I'm only looking for the sale numbers, not the returns, not the allowances, correct? Gross sales. Now, let's pull out our ST12 form, please. Page 1, the ST12. Question number 1, total sales. Wisconsin needs to know the gross sales. Not influenced by returns, not influenced by discounts. They want the gross sales, the sales subject to this sales tax, right? Now, as a reporting function, we report this form either monthly, quarterly, or annually. Most of us, the state will make us a monthly filer. Monthly filer. And the goal here is to be sure that when I add up, yes, Karen?
Don't be a monthly filer, like people that make a lot of money, like companies that make like a
Yes,
lot.
very good point, yes. Those that have many taxable sales, correct. The state tells you whether you're a monthly filer or a quarterly filer or monthly or annual. There's 3 choices, annual is the third. And it depends on how much sales tax you have, right? So, and every year that could change, right? If you all of a sudden have a lot of taxable sales when you didn't in the past, the state will send you a letter say, hey, you graduated, you're now a monthly depositor. Very good. So these 12, let's just assume we're a monthly, these 12 have to match the annual sales tax or annual tax return. So when you file your tax return at the end of the year, these technically should add up to the gross sales on your taxes for the end of the year. They don't physically match those yet, I don't believe, but the future is coming. Probably they will in the future. Now also on this form, items 2 and 3 are exempt sales. 2 and 3 are exempt sales. Now there's 2 reasons that you could be exempt from taxing. One is the customer is exempt. Totally. And we had some examples of when a customer is exempt. Government. If you sell to the government. If you sell to a nonprofit. If you sell to a manufacturer, OEM, right? They're just putting it into their product, which they then sell to somebody else, right? So those are examples of customers. Farmers, forgot farmers, they also are exempt. Line 3, though, is exempt property and services, groceries, real property, which is buildings, right? And highway fuel, that's a different form, that's why it's exempt. We get charged sales tax, right? There's a lot of taxes on fuel, but that's a different form. And then finally, where do our returns go? You will have a return for your case. So on line 4, I would like to see the return number here. Line 4. And line 5 we won't use. We're not assuming our sales tax is in line 1. Okay. Now, on this form, a couple things. We also have on our income statement sales discounts. if a customer pays early, right, we give them a discount. It's our early payment discount. Sales discounts are not recorded on the ST-12. The state of Wisconsin doesn't care that you give your customer a discount by paying early, okay? So don't include discounts on line 4. All I want to receive on line 4 are the returns, no discounts. Let's stick with this form if we can. Question 6, what do we do?
So after total the liter, the.
Total up
the-
2 through 5, right? Yeah. And then line 7 is
You have to subtract.
subtract line 6 from line 1 to get taxable sales. Very good. And what is that taxable sales based upon?
5%.
The 5% state rate. So in step A, right? Step A is the state tax amount. We flow down to step B to do what? What's step B about? The county, right? Now, I know Brown is listed here on line 16. We are not going to use line 16. That's disappeared. We have paid the stadium tax. We're fully done. And now, in 9A, I would like you to use, because I have them memorized, Brown County is County Code 5. Brown County is County Code 5. Brown fits the 5 letters. And all of our sales in the case are contained in Brown County. So you're not going to have a Door County, a Marinette County, Oconto County. Those you could list, those other counties you could list in 10A, 11A, 12A. Remember, we have to tell the state how much sales were in each county. And Wisconsin has 72 counties. So if we need more than 4, you have to attach CT to fill in the other counties. And then what happens? They get the check from you. They see which county gets how much, and the state then sends a check to each of the 72 counties. So fortunately, we don't have to do that. The state does that. Does this step B make sense? Now in 9C, all we need to do is put the taxable sales, which is the same amount as line 7, in 9C. Same number goes in there. And the reason it's the same number is we only have one county, right? If we had multiple counties, obviously the multiple counties would need to add up to the amount on line 7. They got to be matching. And then on 13, we total that up. And then on line 14, what's the county rate? The county rate is the 0.5%. So 0.5% of 13 is our county tax. The county tax portion. We're not in Milwaukee, Ozaukee, or Racine, Washington, or Waukesha counties. We're not going to do anything in 15B. We already talked about 16B. We don't do anything there. And then finally, we have our total right on line 17. We got done with page 1. And what's nice with the fillable form, it'll do all those subtotals for you. So keep that in mind as well. Go to page 2, flip it over. Step D is the total. from the previous page. Now, on the total, this has to match the sales tax payable general ledger account, right? The general ledger sales tax payable. That's a verification that this form is correct. So one of your check figures on your net solutions is that this form has to match the general ledger report. Where else can I get this number? What other report? Where does the payable appear? What report?
It's on your taxable exempt state, right?
Not income statement.
No, it taxable exempt sale.
Oh,
report.
yep. Yeah, we'll talk about that shortly, Bashari. I was looking for balance sheet,
Oh,
right? On the balance sheet is where that account appears. So if you can match that with the amount on line 18, we should be good. Because after line 18, there is a discount. It's the only tax that I know of that the state will give you a discount on. So if I pay by the due date, right, I get that discount. And there's a range here based on how much. Do I have to fill this report out even though I have no taxable sales?
this you want to
Yes,
see?
yes, you have to. Whatever the state tells you to do, you have to file the report. All right? So then I subtract the discount from the total and get my net owed. Net amount owed. Steps E and F are for purchases. Tom's question earlier, do I have to charge for an out-of-state? The answer is no, if you don't have situs. But on the other end, what do they need to do? They have to claim that as a purchase that was not taxable, and I'm going to pay my tax in on that purchase. So if I bought a computer from an out-of-state supplier and they didn't charge Wisconsin sales tax, I would have to put that computer purchase here. And obviously, if I'm in Brown County, guess what? I gotta put my purchase in the county section as well. We are not doing use tax on any of our cases or net solutions, so we will skip lines E and F. We won't be doing E and F. But just realize that's for purchases without the sales tax. And the Wisconsin Department of Revenue does audit these reports. They say, hey, we're coming in, we want to look at your purchases, we want to look at your sales. Are you charging correctly? Are you charging on the right items? Fortunately, I never went through an audit.
That's good.
That's good. So then we finish up the report with line, or step G. We have a total of all taxes, both sales and use taxes, if there are any. And then if we have any late, if we filed late or paid late, there's a late filing fee plus interest. Hopefully we won't be late, so we can avoid those, and then the total ends up here on line 33. So that's what I'm looking for, is that this form for the case be completed. Obviously, all pages 1 and 2 are fully completed. And who signs this report? Can you, as the employee working for the company, sign it? Or should you sign it? No. If you're a corporation, the officer has to sign it. Or if you're a sole proprietor, the owner has to sign it. If you're not either of those, you do not sign these reports. You can complete it, you can fill it out, right? That's what your job is, but don't sign it. Why don't you sign it?
Accepting responsibility.
You're accepting responsibility. And if the company made an error, or you didn't pay it in on time, or that it's not paid in at all, guess what? You might be on the hook. So don't sign it. Okay, that's not your job. Also, can I go back to page 1 quickly? I would like to use the 20th day. Let's just assume this is a January period. So it would be due by the 20th day of the following month if you are a monthly filer. Not sure why they picked the 20th, but that is the predominant. Now, some might be different. Some might be different. It might be the end of the month if you're a quarterly or annual refiler, but most monthly filers are due on the 20th day of the next month. So this is critical. Remember, if you are cash flow tight, you play your employees first, right? Because you need employees. You play the IRS second, because the payroll taxes, that's number 2. You pay the state third, which is right here, this ST12. So many clients I've seen fall behind here on their sales tax. Is that money yours? No. You can't live on your customers' sales tax. So the IRS, or excuse me, the Department of Revenue, there are heavy fines and penalties if you don't pay this in on time. This is where the line of credit is really useful. If you are cash tight, go on your line. It's much cheaper than not paying this on time. Because this will take you under if you get too far behind. All right. Do you think any other questions on the ST12? It's not too bad of a form, actually. Now, there is one report that helps us fill this out also, and Fashiri mentioned it. So I'm going to go to that in the book. It's called the Taxable Exempt Report. It's in the customer, obviously, section, but it's way down on the bottom. It's the last choice. And I'm going to put this on my notes. It's called the Taxable Exempt Report, which I don't have any in here. Great. Why not? I think because my date range is the 19th.
Let's change to 17.
Yes, I believe so. So I'm just backing up here to the 17. There we go. All right, so let's just say this is a month, and basically it's broken down by county very nicely. You can see how it's broken out by county, because that's how we need to report it, by county, right? And you'll notice that there are taxable sales and exempt sales columns, and total sales with a tax amount for each. So this report should be run, obviously, for the period of time, 1 month, that you will be generating the ST12. Because again, it shows you the taxable sales, which is on what? Lines what on our ST12? Line 7, right? Should be able to match the taxable sales to this report. Now, total sales. The problem with total sales, it's gross sales, and I'm not sure why they do this. these total sales are different. I can't use that in box 1, is what I'm saying. Box 1 wants what?
They want gross.
Gross sales. This report says total sales. What that number is the net sales. So you certainly can use this number as a starting point and do what? Add the returns. Then you're there for gross sales. But what report can I use to get my gross sales instead of this one?
Income.
Income statement. So rather than this, I would use the income statement. Add up your sales. Use the income statement for gross sales. And what line is gross sales reported on the ST12? Line 1. So that's the number that you need on line 1 is the gross sales. Remember the goal that this shows not only, where's Georgia? Here's Georgia's state tax, right? That's got to be on line 8, right? Taxable sales times 5%. And then the county taxes are in step B, right? On page 1. That also should match. Now, there might be a cent difference. I don't care. Just use what's on the report. Don't worry about the penny or 2. Because of what? Rounding, right? The form is doing a whole bunch of sales where this might have 1,000 different invoices to get up to that number. So there are going to be rounding differences. But if you're within a penny or 2, you should be okay. So I'm going to take a picture of this also. Because that is a very common problem when filling out the SD12. Students want to take this number as their gross number, and it's not. So, in chapter, going back to my notes now, I'm on page 2 now of my notes. Page 367, there is a figure, 9-9. I got about 10 minutes yet. 9-9, figure 9-9. For the cost of sales numbers and the inventory numbers, it says to be calculated. The system doesn't know what layer, what FIFO layer or LIFO layer is going to be used until you hit the save button. So you will never be able to, on figure 9-9, you'll never be able to see the amount until you press the save button on that invoice. So just be aware of that. That's what that means. It's coming out of a FIFO or LIFO layer. On page 370, 372, recording a cash receipt when a customer pays an invoice. Here's where I again mentioned the deposit ticket ID, so that all our deposits with that same date are lumped together for bank rec purposes. This helps us do our bank reconciliation. At the end of the month. And then on pages 372 through 375, they practice generating invoices, right? And credit memos. Just as a reminder, when I do a credit memo, what is my debit and credit entries? What should I see when I issue a credit memo?
You, to the customer, right?
To a customer, yes.
So the sales tax have to be reduced,
So I'm gonna debit sales tax,
yeah. And
which
then-
makes it come down.
Yeah. And allow rent because our sale reduce. Return and allow rent.
Yep, I'm gonna debit sales returns and allowances, because it's a contra sale.
And credit account paid, account receivable.
And credit accounts receivable. Very good. That's good. So when I issue a credit memo, that's what we should see on our journal page, right? Or journal entry page. If it's a return on a inventory item, what else should I see?
The cost of goods sold, that's what,
Yep, the cost of goods sold is what?
it's gonna be go back, debit,
Credit.
oh, debit a second, oh, credit, yeah.
And what's debited?
I inventory.
Inventory. So again, realize as the accountant what effect or what accounts are affected on every transaction you enter into your system. So be careful with that return. Watch for those things. Make sure that they are going in the right direction, correct? Make sure they're going in the right direction. Quotes are talked about on page 375. We don't influence our general ledger with a quote, but they actually talk about converting, hopefully, right? That's the goal, are converting our quote into a sales invoice. So that's down on page 377. Now, I think I need to add anything here. When do I do the conversion in the business cycle? When I what?
When the customer, they want to place order,
Not, when do I convert a quote or an order to an invoice? What has happened?
An agreement, they're getting,
they're gonna.
I ship the product, right?
Oh. Because of the order, that's why.
So when I'm done with the job or when I've shipped the product, that's when I do my conversion. That's when it's a sale to me, that's when it's revenue to me, right? And that's when Wisconsin wants us to be sure that we collect our sales tax. Does that make sense? Now, on the ST12, when do I report the sale there? Is it a cash sale, or is it when I receive cash, or is it when I issue the invoice? When do we charge sales tax?
when you issue the invoice.
When you issue the invoice. Again, the state doesn't care if you don't collect the money, right? So always, always on the ST12, it's based on sales invoices, not when we collect the money. So if we never collect from a customer, how do I get my money back from the state of Wisconsin? What line do I use to record what? I want my money back. Yeah, on this form, how do I get my money back if a customer never pays me?
The write-off.
We have to write off the account, yep. So where do I put that?
And bad debt, right? Number 4.
Number 4, yep. You see the word bad debt? What does that mean? They never paid us. So I'm writing off the account, right? So by doing that, I'm getting my money back technically because I'm reducing my gross sales for that period of time, am I not, with this return? So bad debts are recorded on line 4 if I write off an account. That's the only way you're gonna get your money back. That make sense? Okay. All right, let's see. Starting with page 380 of our book, they talk about finance charges. Again, we said finance charges were when a customer pays late, right? We can add on, we can legally, and you see that on invoices, we will add on 18% annual, 1.5% per month if you don't pay on time. So that's where you set this up, and that's talked about 380 and 382. And on my next page, page 3 here, where do we set this up? We set this up under the customer defaults. And it's right here, it's under finance charges. So in this case, we will charge finance charges. It's on days overdue, 15 days overdue. So we do give them a little break, right? 15 days past the due date before we start charging. And we're charging 18% if the invoice is below 10,000. But if the invoices go above 10,000, what do we charge? 21%. Okay? And if it's a small invoice and it doesn't even add up to 50 cents in finance charges, we're going to charge a minimum. In some cases, clients will charge a $5 minimum, not a 50 cents. But remember, you got to do all the paperwork.
You can process it.
Process it, right? Process it. And look at the account number it's using, 45,400. This is an income account, but it's an other income. Other income, it should be. Look at your income statement. Other income is way at the bottom, is it not?
Yeah.
So you have your sales, you have your cost of goods sold, you have your expenses. Those are the orders. Other income should be down at the bottom. It's non-operational. What does non-operational mean?
You don't use it to run your business.
It's not part of your business income source, is it not? Sales of merchandise or services, that's part of your operation. So a finance charge, interest expense, remember interest expense is down here also? Those are finance things, non-operational. That's what needs to be on the bottom. So just, I think they're in error here. This should be in other income. They got it much higher in their income statement, in my view. GAAP would say that same thing, right? You got to follow GAAP rules. All right. As a note, page 385. It's not 385. Try 389. Page 389. The sales journal is misleading. We talked about this already. Does everybody see the number $23,252? I think it's 80 cents. Is it close? 48 cents. Thank you. Does everybody see that number? Page 389? Sales journal. That's the total, right? Is that our total sales for the month? Never is, no. So if I'm asking for gross sales for the month, this is not it. Okay? Look at the report. What else, what other transaction type is in that 23,000? The last one, what is the last one? What does CM mean? Credit memo. And actually, it's added on this report. What does a credit memo do on your income statement?
Return.
It's a return, so it actually reduces your sales, does it not? So why is a credit memo on this report? It's a contra sale, right? So this report is very misleading. So you can't go to your boss and say, we had gross sales of $23,252. They run the income statement and it's like 16,000. So that's the mistake I don't want you to make. Or if you're on a case and I ask for gross sales, don't use the sales journal number. Because what else is in here? Sales tax and cost of sales. Sales tax and cost are in these numbers. So I have that here and here. Okay, for the case, for chapter 9 then, can I have you do, or go to page 392, please? It actually starts on 393. I have some changes for the case. I don't want to do California. So we're getting rid of the Board of Equalization. So go to page 4 then of your packet. I think we're pretty set. We've done it for our Net Solutions project already. But I want you to again set up a Wisconsin sales tax code for the case. You will need to do the same thing for your nets, what you already did for Net Solutions. So set up, I have number 2. Instead of the Board of Equalization, you will create a vendor called Wisconsin Department of Revenue. Item number 3 in the case, it says instead of using the 7% California rate, I want you to use the 5% for Wisconsin and 0.5% for Brown. And here are the screenshots of setting up that Wisconsin Brown sales tax code for 5.5%. And then I want you to use the 5.5% on your customers then. So instead of California, for your customers, you will be using the Wisconsin Brown code for all customers. Now I know the customer list, there's only 3. There is Marquise, there is Sandra McGuire, and then there's Louis Abelard. You can use the same city, I don't care if you can use the same zip, but just replace those all with Wisconsin. You can make up your own city, make it just Green Bay, if you'd like, for all your customers. So those are the changes for the case at chapter 9. Once you are complete with the transactions for January, there's only 7 of them. Please complete a customer ledger report. So watch transaction dates. You guys have been really good with that. I don't want to see the receipt of money before the invoice. Okay? Watch for negative numbers. Run a cost of goods sold journal report, just so you identify what's on that report. And then complete the paper copy of the ST12. You can certainly search for, under the Wisconsin Department of Revenue, it's called a fillable ST12 report. And that you can generate the PDF file. You can certainly, I have more ST12s here. You certainly can fill out another paper copy if you have notes on your other. So look for that. If you can't find it, just let me know, and I certainly can help you with that. And then obviously answer the questions for this case. I don't think there is anything. Oh. We do have a return. On McGuire. So make a note here. Watch discount on McGuire return. Because we have return, I'm talking about the early payment discount, right? They paid within the terms of that discount. I do believe on the 21st, she says paid invoice $650 less discount. Be careful with that discount because we have a return on it. So you may have to recompute this discount. Because of the return. Remember, Sage does only do the discount on the gross amount. All right, so that's all I have for Chapter 9. Any other questions? All right, I'm going to stop. I'm going to take a break here. You also. And then we'll come back and do Chapter 10.